Hi everyone and welcome to Trades of the Week, and today we're going to speak about some very exciting topics. Now, today will be all about, will we see Bitcoin go higher or crash lower? So is this a fake out or an actual breakout we're seeing? That is something we're going to discuss. And also, is it green light? Will we go into a bull market, or is a recession on the horizon? Well, in this episode of Trades of the Week, you will find out. Now, before we dive into it, I do need to say that we have an exclusive I Am Insider Facebook group where you can become an insider today. It's for free, so make sure you press the link below if you would like to get the stock of the week, the crypto of the week, the market updates that we're sharing with you on a weekly basis. And not only that, you're going to be joining a community so you will know exactly what's happening in the market, when it's happening, and what actions to take. So make sure you join the group now. And with that being said, let's dive into it. So the market has been really exciting over the last couple of weeks. We've seen a big rally, Bitcoin being up as much as 45%, but we're going to start with stocks just as per usual. So what has been happening in our stocks portfolio since we last spoke? Now, if we look at HE, we have the stop loss at break even currently. So we are slightly in a profit here, and we're looking for this to go down further. So that is awesome, and well done if you're in this as well. Unfortunately, we had a 1% loss on NABL. That's a boo and not a moo. So, and that's just part of the game. There's no emotions involved because, and this is where most people go wrong by the way, they don't have a stop loss. And it's so important to have a stop loss to cut your losses short. That is critical. And then with ADT, we need to make some changes here. Before, we calculated based on this here, these candles, but now we need to recalculate this. So currently, we calculate on this last candle on the 31st of January. So I think this can give us a good entry as well. And on ACO, we are up roughly 1% in profits. That is really nice to see. So stop loss will now be moved to break even. So we're now in a risk-free trade here. This is money management. So money management and trade management more so really means that you move the stop loss. You need to look at this. It's 20 minutes a day, but it's not really more than that. And then with BRDG, that's Bridge Investment Group Holdings, you can now see that we are up, we're around break even, so you can do your research. If you want to get into this as well, you obviously can. And last but by no means least, we're adding this new one. We're adding GBTG. So we have a couple of long positions and a couple of shorts here. So we're adding one this week, which is Global Business Travel Group. And we have a red nice candle, and we're calculating the entry point. And hopefully this will go in our direction. And we have a nice 5-4 or 5-1 reward risk ratio, which means for every $1 you're risking, we're looking to make 5. That is incredible, of course. So before we dive into anything else here, I do want to go through what's happening in the market. Are we due for a crash, a correction, or is it a breakout we're having and we will see a bull market? Well, let's see what we have here. So basically what we've been seeing here is in consumer spending in December, we saw a 0.2% drop from November and a 0.3% decrease in real spending when adjusted for inflation. What does this mean? Well, it means that the spending has actually been decreasing. That's really the essence of this. And when spending decreases, it leaves less margins or less profits for these stores. Now, it was very small percentage, but even then, it's kind of a large piece of the economy. We want to see that growing, to see that switch in the economy. Now, at the same time, we are actually seeing that the personal income has increased by 0.2%, which is good news because it leads to a potential of spending growth. So we'll see if that will be happening. But in a slowing economy, that's actually quite good news. Last but by no means least, the inflation actually decreased to 5%. This is the lowest annual rate since September 2021. And the goods inflation decreased to 4.6 and service inflation held steady at 5.2. Now, this is important because inflation, as you know, or maybe you don't know, but it means that everything is losing value. You've probably seen the eggs has gone up, 60% in price. It's insane. Your money literally becomes worth less and less, which is why it's so important to learn how to trade and invest properly. So that's also why you're here, I'm sure. So with trading and investing, you can learn how to make more than what the inflation is on a yearly basis, which is super duper important. Now, basically, we're going to get the numbers. There's a lot of numbers this week, which will lead to a lot of volatility. Among others, we'll get the CPI data. We're going to see the inflation, but more so, see the interest rate hike. So will the Fed raise the rates by maybe 25 basis points or 0.25%, or will they do, for example, a 0.5 that they've been talking about? So depending on what they do, we're going to see an effect on the economy. We can't see that yet, but I think if they do a 0.25, that will be priced in and hopefully lead to higher prices. But that being said, if we have a look at this US 100, the tech stocks, for us to see a positive movement here or a positive breakout to the upside, we would need to cross this level here. So now maybe we have a pullback to then hopefully go even higher. But if we fail to break this, we could probably expect a test of these lower prices yet again. And the one metric we want to look at is the DXY. The DXY is a dollar cost index, and I do believe that this could potentially turn around and we could see higher highs and higher lows, which would drive the market lower. So what we are watching for now is, will the DXY, I mean, it's normal we have corrections, right, in the shorter term, but if the DXY crosses above 105, then we could expect this to create a higher low and then go even higher, which would drive the stock market lower. But we're going to be prepared for both, which is what we are when we're trading and investing, which is really, really, really good, of course. So the 1st of February, they will give us the announcement if we're going to get a 25 basis point or 50 basis points, and depending on what they do, we'll see what's going to happen. Now, if they actually just do 25 basis points, that we believe that's going to be bullish for the market. So I think we will see the market head higher. So if we get that, I do believe we're going to see tech stocks such as Tesla, such as the other ones, and even the broader market go higher, even cryptos. And just one piece of news as well we're going to go into is with Tesla. We actually looked at Tesla. We're up 30%. So if you watched this last week, you would be up 30%. But we're going to get to that in just a moment. That's going to be a cliffhanger. So if you look at the stock market then there are a couple of good companies to look at potentially. Some good ones will be food and beverages, because if we do go into a recession, which might be the case, because usually what we see is when Fed pivots, that means when they say, all right, we've gotten the interest rates up too much, now we need to pivot and we need to slow it down again to stabilize the economy. Then usually we see the biggest drops then in the market, and when we see those drops, that usually marks the lows in the market. So if we see something like that, if we go into a recession, usually the companies that performs really well are companies such as Tesco and even Johnson & Johnson that I just want to have a look at. And Johnson & Johnson is actually from the high down roughly 13%. So if you're not in this, it could be really good with the VCA, which I'm going to get to in just a moment as well. But that's a good company. The companies that usually struggles during those times are actually the tech stocks. So those could be the bad ones. So it might be worth looking at getting into the food, beverages, and these consumer supplies rather than tech stocks and growth companies. But let's just look at Bitcoin as well and cryptos. Now, cryptos is doing incredibly well, and we've seen a huge rally in the crypto markets of just about 40%. Now, don't be surprised if we are getting somewhat of a correction, maybe down to 20K, to then go even higher, something like that. Now, we're not sure what's going to happen, but there are a lot of bullish facts for Bitcoin as well. Now, if the stock market goes higher, so will probably crypto too. And we did break this last high that was created. We spoke about this one a week or so ago as well, but we broke this. So hopefully now we can start creating higher highs and higher lows and initiate a good movement to the upside. And what we will see today is also a closure of the monthly candle. And if we get a bullish candle such as this, it's called a little bit on the way to an engulfing candle, or at least a harami, or a green giant bullish candle at least, then the probabilities are that maybe we get a small pullback in the shorter term, maybe go down a bit, to then go even higher. So I think we might this month, if the Fed just raises it, the rates with 0.25, then I think we'll see a bullish momentum in the crypto market as well, and I think that could lead Bitcoin and cryptos even higher. And frankly speaking, right, if you're looking at the crypto market, this has been down a lot. It's down 75%, now it's down 66%. So even if you're getting in now, great first entry point. But I do think in the beginning of the month we might see a pullback, which we are seeing at the moment. Looking at the daily, once again, we are seeing a little bit of pressure to the downside, and if we manage to break below this level here, then I think we'll definitely retest the 21,000 or so. But I still think we're really bullish in the crypto market. Now, there's a few things I do want to mention here, which I think is important. So the rally really is gathering steam, and I think we're going to go higher for a few reasons. The Fed pivot might come soon, but more so, they might just slow down the raising of interest rates. The US debt ceiling has been reached as well. Will they start printing more money, which has also been a bullish signal for cryptos? And then there's been numerous announcements, but this is what crypto projects do. They build during these times. They increase and improve their products and services. And Binance actually announced a new MasterCard in South America, just among other things. So it's all happening, and actually Binance just got regulated in Sweden as well, which is great news for us in Sweden. So the thing is as well, right, and we're going to speak about this, I'm going to see that the next week's trades of the week as well. We're probably going to speak about regulation, decentralization versus centralization, and how US could be shooting themselves in the foot, frankly speaking, as well. But we're going to get into that next week, but it's going to be a really exciting topic. And one last point on cryptos is this. Gemini, their users thought their funds were protected by a regulatory authority, because in their earnings section, where you can kind of make money a few percent a year, the money has actually been locked, because it turns out all the customers' funds have been frozen since the exchange paused its withdrawals, because it was an unclear FDIC and a statement that came out. So currently, and they actually also are facing some kind of they've given some misleading statements, so they're facing quite a bit of problems, the Winklevoss twins, who founded Gemini a while ago, or many years ago. So this really says that, make sure you invest only with the biggest exchanges. Gemini was one of them, but keep your money in wallets. I cannot stress the importance of this and emphasize that enough. So this is quite interesting as well. There's been a study made by Forbes, and the 10 biggest cryptocurrencies they like and think are the best ones. Now, obviously Bitcoin, Ethereum, and this leads us in to some cryptos to avoid and look at as well. So cryptos we are looking at are layer 1s or layer 2s. That would be your Bitcoin, Ethereum, even Solana. We spoke about that, but they're actually a couple of weeks ago we said we're not really investing more into Solana, but we are changing our minds on that now, because they are actually really building steam and it looks really positive. The fundamentals has not changed, so we keep investing in Solana. I mean, we invested all the way down to a 90% drop. But other projects such as let's see here, we're going to get to so Cardano as an example is another one that is really interesting. There we go. Cardano is another one that is really interesting. These are all layer 1s, the Internet 2.0, the foundation. These have thousands of smaller projects built on them, so these are the ones we're looking at. Even layer 2s that are supporting this foundation, the likes of Matic as an example. So Matic is one of them as well that's gone up. So make sure you look over your positions, because despite they're going up quite a bit, I think they can do really well. But in the shorter term, I think we're going to get a correction in the crypto markets. You could probably get in at better prices, but make sure you look at these projects, you look at Bitcoin, Ethereum, and invest according to the strategy. So currently with this, we are actually now down. I mean, we invested all the way to an 80% drop. It's currently down 68%. So if you're not in Bitcoin, not in Ethereum, do your research. We think that we're going to see the biggest transfer of wealth in this next bull market, and it's going to come. But I do think it's probable that we will retest maybe this level here down at 1400, maybe something like this, and then we see another push to the upside. I think something like that could be probable, but don't quote me on it because I don't know what's going to happen, of course. So there's some good and bad coins as well. Now, some coins I would avoid is, for example, Thetan Arena. I'm invested in Thetan Arena. I think it's a great project. But just what you will see is in a bear market, this will happen. It gets completely annihilated. And it's just a game, right? It's a cryptocurrency game. So therefore, it's a lot safer to invest in the actual platform. So if you're starting out, make sure you focus on the platforms and not the coins. So last but by no means least, we want to get into the crypto or the stock space as well. With Nike, we're taking 15% out. We got stopped out and we made some good profits on Nike. So go Nike. That's a moo. So 15% there. Well done and happy days. And then if we look at Barrick's Gold, we put the stop loss now at 10%. We're going to in a couple of times and now stop loss at 10%. So that's really good. Same with AXP American Express, stop loss at 15%. We're locking in those profits. And the same with Tesla. Tesla really rallied from a 60% entry and we have the stop loss at 30%. Now comment in the chat. Are you locking in some profits on these as well? Because maybe we're going to go up a bit further but then come down. We don't know. But comment in the chat. Are you locking in profits on these? Or which ones are you locking in profits on? We're not really adding anything new today just because we are seeing a recession on the horizon and a bigger pullback as well, and we are not going to invest when we are seeing something like this is happening. So we're going to see how this plays out. We could just be shorter term, but this week I just want to talk about Johnson & Johnson that usually doesn't fall that much in a bear market. So being down roughly 13% from its high actually gives us a good first entry. So we talked about this before. We're already in this at minus 10%, so you can actually get in at a better price than we have. And usually when Johnson & Johnson falls 10%, it's a good time to get in because it's a really stable company, one of the world's best, I would say, as well. Obviously one of the world's biggest also. So in summary, basically, we are quite bullish. So in the shorter term, we could see a correction, and in medium term, we could probably see some more bullish momentum taking Bitcoin and the stock market higher. But then we need to be cautious towards the third quarter of this year. We might also get into a recession. But just know this, during trades of the week, we will update you what we think is happening and exactly the positions we're taking or not taking to ensure you're on the right side of the fence. So with that being said, let's jump into the results as well. So if we look as of today, 31st of January, we have a 1% loss on Buffalo. Boo! Getting our total results to 67.2% on the total portfolio. VCA, we're getting that up 15%. Yay! Or moo! To 15% plus to 2,136% on the money invested. Crypto results stay the same, and just know this, we are in a losing position on the money we have invested on CCA and small cap at the moment because the market is down, but that's fine because that's exactly how we do and how we invest with the strategy. Remember, it's a long-term game. It's from months to years basically. So with that being said, everyone, I hope you really enjoyed Trades of the Week this week, and do not forget to subscribe to the channel, press that alarm bell to get the notifications, like the video if you enjoy what you're seeing, and also don't forget to comment below. Have you taken any profits, or what are you taking profits in, or what are you investing into? So don't forget to press the link below to sign up to the IM Insider to get the weekly updates, the crypto of the week, the stock of the week, and much, much more. So join the Facebook group today. So with that being said, from myself and the entire team at Investment Mastery, have a great week, and we cannot wait to see you on the next version of Trades of the Week.